Hey everybody, this is Ryan Mallory with a stock market bubble update for you guys here. Now, we're 2 weeks into the new trading year, and already the S&P 500 and the Nasdaq have both notched their first losing weeks of 2021. Meanwhile, the small caps, that would be the Russell 2000, is continuing to push higher and higher and higher. And right now, it's the strongest index of all of them. Now, I used the term stock market bubble update because we are in a stock market bubble. That doesn't mean the market can't remain bullish. By its very definition, a stock market bubble is bullish. But what happens with stock market bubbles is when they conclude, they tend to have a very dramatic sell-off, if not an outright stock market crash. So I use that term not to mean that the stock market is all of a sudden going to crash tomorrow or that it's going to end next week. No, I'm using it to give you the understanding that we are in fact in a stock market bubble, and that you need to be cautious that because when the stock market bubble ends, you want to make sure that you're walking away with the large majority of your profits. If you're not, then all of this work for the past few years was all for nothing. And look, stock market bubbles are not anything new. You've had them going all the way back to like the 1600s with the tulip bubble. And now we find ourselves in a Fed bubble where the Fed just keeps printing money and it keeps pushing asset prices higher and higher and higher. So at one point it will come to an end. What we want to do is each week we want to make sure that we're monitoring the stock market, that we're looking at stocks each and every day to make sure that we're not going to catch ourselves in a major stock market crash when indeed that bubble gets popped. Before I forget, make sure to check out down below, click the join button, and you'll get access to my YouTube membership where you'll get multiple updates each week of the S&P 500, the Nasdaq, and the Russell Index, followed by updates each week of all the FANG stocks. That would include Facebook, Amazon, Apple, Netflix, Google, Microsoft, and Tesla. And then you're also going to get my watch lists updated multiple times each week. These are the master watch lists that I trade off of. And then you're going to get daily setups and the stocks that I'm watching each and every morning, followed by the most intriguing charts that I find in the market every day. So make sure to click join down below. Now, let's get into this market here. We're seeing a lot of rotations this past week. We're seeing it in the week prior. Small caps, money keeps flowing into it. You're also seeing a lot of capital flowing into the cannabis stocks. On top of that, you have some sectors that are showing potential with the vaccine rolling out to be big plays going forward. That would be your airline stocks and your cruise line stocks. But that hasn't quite come to fruition just yet, so maybe some patience there going forward. Meanwhile, the big talk on Wall Street is all of these electric vehicle stocks like NIO, like Tesla, and then all these other plays off of it like Plug, PLUG. Now, NIO and Tesla just started pulling back here, and there's a good chance that with these EV plays that you're going to see those bubbles as well start to pop at some point in the future. And I know by saying that gets a lot of people's panties in a wad. I'm not here to make you feel good about your trades. I'm here to give you unfiltered, unbiased opinions on the stock market here, and that's what I'm going to tell you. Right now, I would not be buying Tesla at these prices. I would not be buying Bitcoin at these prices, and I would not be buying Plug or NIO or any of them. Patience is required in the stock market. You got to let them come back down. Maybe they don't come all the way back down, but they need to come back down enough where they start to base and give you an opportunity to get long at a decent risk reward. Right now, there's too much risk of being a bag holder in these plays. The FANG stocks continue to do nothing. I mean, this was all the talk back in March, April, and May about how great these stocks were. And then in the second half of the year, most of these stocks like Facebook, Amazon, Netflix, and Microsoft have done absolutely nothing. They've just been trading sideways. So the money's been rotating out of that, going into a lot of your small cap stocks because during that same time, Russell Index has been going through the roof. So going into the week ahead, we're looking at the potential for there to be a bigger pullback in your cryptocurrencies, the electric vehicle stocks, solar stocks. So right now, if you're looking at pure momentum, watch the rotations that are taking place out of sectors like your cannabis plays and like your EV plays and your cryptocurrencies and small caps, as well as the financials, which has been on a huge tear of late. Then start looking to see whether or not you see money start to trickle back into some of these really depressed industries like the airliners, like the cruise lines that have been hit the hardest by the pandemic. And here's what I'm most curious about. We are just now starting the new earnings season, and the bulk of those earnings are going to start coming out in the next few weeks going forward. And the big question is Wall Street going to continue to reward companies that are extremely overvalued and don't really have the fundamentals to back it up? Are we going to see those stocks start to pull back where Wall Street is done rewarding these companies? That is a big issue because there is so many plays right now that are overbought that if they don't meet expectations in this round of earnings, you're going to see a good pullback in those stocks. Now, let's go look at the S&P 500 daily chart using the SPY ETF, SPY. You have a short-term trend line going all the way back to November 10th. It needs to hold this trend line. If it holds this trend line, we're in good shape. If it breaks it, then that's where you're going to start seeing a retest of the 50-day moving average and the potential for a retest of this long-term trend line going all the way back to March of last year. You also have a lot of support here on the green line on my chart here. It's the 20-day moving average. There's a lot of short-term support there where the price action keeps bouncing off of it and pushing back higher. We saw that on Friday. It tested it and then came off of those lows just a little bit. On the weekly chart, what you want to watch is for any upside that pushes it into the upper channel, because that upper channel is going to create some resistance. So it also uses that same trend line that I talked about on the daily chart off of the last year's March lows. It has been maintained very well, and any kind of a break to the upside would be huge for the bulls, but whether or not it can sustain that break becomes very difficult because that upper channel is so steep. Now back to the daily time frame, I want to talk about stochastics. It is actually just coming off of overbought levels. Now, on the weekly, we're extremely overbought. I mean, look at it. It's like 96, okay? On the monthly, it's even worse. It's 98. And I was talking about the bubble earlier. This is what the bubble looked like back in the 90s. This is what the bubble looks like ever since. It's a big, drastic difference in terms of bubbles. This is a much bigger bubble. This one's being induced greatly and aided by the Federal Reserve with their money printing. On the NASDAQ, it's far worse. I mean, the bubble was much more exaggerated back in the 90s, but it's even more exaggerated this time around. Now, speaking of the NASDAQ 100, let's look at QQQ. It's got a very similar chart over the last couple months to that of the S&P 500. You have that short-term trend line here that we need to continue to be watching. We need to be watching that 20-day moving average as well. Both of those are in play here. QQQ closed right on that 20-day moving average. Now, right underneath that trend line is a much larger trend line going all the way back to March, where it runs pretty much parallel with the overall trend line over the last 2 months here. You can see they're both very parallel trend line. If the short-term trend line breaks, I would look for a retest of that longer-term trend line right underneath. On the Qs weekly, you also have that same long-term trend line that we just discussed on the daily chart, but you also have a slight narrowing channel that, if this rally is to continue going in the future, channel resistance could come into play. If it fails at that channel resistance, it comes back down, breaks down below the lower channel, and that's where your ultimate bubble starts to pop. Now, with Tesla quickly approaching $1 trillion in value, this becomes a much bigger player on the SPY and on the QQQ, much like what we've seen out of Apple, Microsoft, and Google. Once you start getting to that $1 trillion range, there becomes a lot more volatility it can create in the market if it has a sell-off. Now, Tesla is not immune to sell-offs. We've seen plenty of major sell-offs. So if it sees like a 10% pullback one day, it's going to have dramatic effects on the Qs and on the SPY. It's going to be very difficult for those indices to rally. So going forward, be aware of the Tesla factor and what its impact can have on the rest of the market, just like we're aware of what Apple and Microsoft has on the overall market. Now, IWM continues to be a monster. These small caps are rallying like somebody just stole their lunch money. And we even had a bearish wedge that was starting to form, and in rare form, it breaks above that bearish channel. That doesn't happen very much. Now, I'm a little bit questionable whether or not it can sustain that move, but if it continues to rally higher, it'll actually form parallel channels, which is very bullish. And more times than not these days, we're seeing the small caps rally at the expense of the Qs. The Qs can't rally when the small caps are rallying on its own, and vice versa. Small caps will oftentimes sell off when the NASDAQ is rallying. And once small caps broke above its previous all-time highs, it went absolutely bonkers. It's up 9 out of the last 10 weeks. Extremely overbought, but it's been overbought for a very long time. So there's no telling how long this rally can go in the small caps, but once it does start to fail, you're going to want to make sure that your stop loss is close enough to where you're going to get out with the majority of your profits, because when this thing starts to pull back, it's going to pull back very hard and very quickly. It's more than doubled off of the March lows. Now, in terms of panic in the stock market, is there a lot of it right now? No. I mean, the VIX went up like 4.5% on Friday when it started to sell off, but overall, it's very suppressed relative to what we were seeing back in March, April, and May. We're not showing any signs at this point of going back to those levels. Now, historically, yeah, it's much higher than what we've seen over the last 10 years. Over the last 10 years, when we were in a good bull market, the VIX was dropping back down into the teens. That right now is not happening. It's still actually elevated over 20, but it's in a well enough range going back about 2 months, and it has shown very little initiative to move outside of that range. The T2108 is an indicator that I use to judge how many stocks from a percentage standpoint is trading above their 40-day moving average. And right now, over the last few weeks, maybe about a month, it's been declining. So less and less stocks are participating in this rally. And usually when that happens, there's a bigger sell-off that's going to be coming on the way. Now, I don't mean to say that we're going to crash because of this. It could just be that we see like a 3 to 5% correction. Who knows? But when you start to see less and less stocks participate in the rally and it's still making new all-time highs, that means it's putting more of a burden on a smaller amount of stocks to continue pushing this market to new all-time highs. At the very least, you can look at T2108 and say, hey, this thing's very lackluster right now, and that's a little bit of a reason to give you some pause. Overall, I'm not trying to drive any panic into your hearts about the stock market. I do think that we're in a stock market bubble, but I'm not person here that's going to sit here is like, this is when it's going to end. There's enough people out there and charlatans that are going to go, hey, this is when the stock market's going to crash. I'm not going to do that. I'm not going to tell you when it's going to crash. I'm not going to tell you how it's going to crash and to what extent it's going to crash. Nobody knows that stuff. Nobody has a crystal ball. What I can tell you is what are the charts showing? What are we doing? How do we protect the risk going forward? Because that's the only thing that matters, is how are you managing the risk, whether you're in a stock market bubble, a stock market crash, or somewhere in between. And a lot of times I focus on the downside of the market, even when we're just ripping to new highs. Why is that? It's because managing the risk is where it's at. If you manage the risk, the profits will always take care of themselves. You got to remember that. And so I'm always looking, okay, when do I need to start decreasing my exposure when the market starts to pull back? Or when do I need to get short? Because I don't want to be a bag holder when everybody else gets out. So right now, just keep managing the stop losses. Keep raising those stop losses. Make sure, okay, if you get stopped out, big deal. You move on to the next trade. You continue to analyze the market. What is it trying to tell you? What did that stop loss tell you? Is the market starting to see that across a number of other positions where we're starting to pull back? Maybe it's not the time to add a new position. Let the market pull back even further and then get in. That's the questions that you want to be asking yourself at this time. If you enjoyed this video, I'd encourage you to like and subscribe. It helps me to continue to put this great content out to you guys each and every week. I love doing this for you guys. I have big plans for you guys in the future. We're going to continue to learn and understand and figure out how to manage risk and allow us to become better traders going forward. So like, subscribe, and tell me down in the comments below, what was your favorite trade this week and what was one stock that you got out of this week? I want to hear about it, and I want to talk to you about it in the comment section below. Thank you guys, and God bless. But on the weekly,